Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. So in this particular video, I am just going to be breaking down something that every gold trader needs in their toolkit. Alright, and specifically what I'm going to be discussing is the best built-in indicators on MetaTrader 4 and MetaTrader 5 to dominate the XAU USD charts. All right, now let's just cut straight to the chase. Trading gold is a beast of its own, right? It's volatile, it moves fast, and it respects key technical levels like no other pair. But to truly master it, you need the right tools. And guess what? You don't need to download or install any fancy plugins. Everything you need is already inside MT4 and MT5. So let us go through the top 5 built-in indicators that work insanely well with gold. The first that we're going to be starting with are the moving averages. All right, the first tool that every trader should be using is the moving average, whether it's the simple moving average or the exponential moving average. This indicator helps you identify trend direction clearly. All right, clearly. So gold loves to trend hard. Gold loves to trend hard. If you look at this closely, this is literally the daily time frame, and you can see that for the past few years gold has been on a steady uptrend, right? Of course, price does not move in a straight line, so there must be pullbacks, but generally you can see for the past few years, since 2022 now, gold has been on an uptrend. Although during 2023, well, gold was mostly going sideways. Yeah, it was mostly going sideways, and then finally there was a breakout in 2024, and since then it has been climbing and climbing and climbing all the way up, just breaking new highs and forming new ATH and so on and so forth. So when you are using moving averages, you should know that it is a very valuable tool when trading gold, because gold is a trending pair. Gold loves to trend a lot, right? It loves to trend a lot. So moving averages could come in handy. Okay, so I'm going to recommend using the 50 EMA and the 200 EMA. Okay, having the 50 EMA or 200 EMA on your chart gives you a strong visual cue for support and resistance zones. Combine them to spot golden crossovers and ride the wave with confidence. Now, the next indicator that we are going to be looking at is the relative strength index. All right, relative strength index is another popular indicator that is really beneficial when trading gold. Right, when gold is overbought or oversold, the RSI is your early warning system. All right, so just ensure that you use the default settings, period set to 14. All right, and look for divergence or key reversals, key reversal levels at 70 and 30. All right, this works beautifully during retracements and pullbacks, so it is actually one of the cleanest ways to catch those sniper entries. Now, because gold is a trending pair, you can start from the higher time frame and look at the current momentum in the market. If you notice that gold is actually trending upwards at the time, you can come to the lower time frame and look for precise entries. Maybe depending on your trading style, whether you're a swing trader or day trader or scalper, right? It's going to determine the time frame you're going to come to. Then you can watch out for the RSI entering the 30 level. When it gets into the 30 level and cross back upward, it could be a time to look for a buy opportunity. All right. But if you want to trade against the trend, well, you are on your own, but you have to be very careful if you are trading against the trend. All right. Now, the next indicator we're going to be looking at is the Bollinger Bands. All right. The Bollinger Bands is another important indicator. Gold thrives on volatility, and that is where Bollinger Bands shine, right? The Bollinger Bands help you visualize how far price is stretching from the mean. All right, helps you visualize how far price is stretching from the mean. A squeeze in the band, when you notice a squeeze in the bands like what we had here, it means that a breakout is incoming. When you notice a squeeze in the band, after a squeeze, there is usually a breakout. So once you notice a squeeze, just expect a breakout. The breakout could be to the upside or to the downside. All right. A touch on the upper or lower band gives you an opportunity to look for potential reversals. Okay, Bollinger Bands give you a whole new dimension of control over gold's volatility. When volatility is low, there's going to be a Bollinger squeeze, right? The Bollinger Bands are going to be contracting. Then when there is an increase in volatility, you will notice the Bollinger Bands widening, just like what we can see happening here. All right. Now, let us talk about the MACD, right? Let's talk about the moving average convergence divergence. Okay, now the MACD is gold when it comes to spotting momentum shifts. All right, it gives you both trend and momentum signals in one indicator. Okay, so just look for signal line crossovers or divergence between MACD and price. All right, remember that a divergence occurs when the price is forming perhaps a lower low, and then you have the MACD forming a higher low. That's what we call a bullish divergence. Okay, so when you have a bullish divergence like this, it means that a bullish reversal is incoming, and you can see that's exactly what happened here. So once you go to the higher time frame, observe the prevailing trend. Then when you come down to a lower time frame like the 1 hour, you can look for things like divergence that supports the prevailing trend. So once you get your signal, like a divergence signal, you can go ahead to enter a trade and ride the wave. All right, then finally we are going to talk about the stochastic oscillator. All right, stochastic oscillator is another popular indicator that you can use to trade gold. Okay, this one is a gem for shorter time frames. Okay, because gold tends to make sharp reversals, and the stochastic helps you catch those turnarounds with precision. Overbought is above 80, oversold is below 20. So you can combine this with structure and you've got an edge. All right, now here's the real power. These indicators are not meant to work alone. Combine them, use a moving average for trend, RSI or stochastic for entry timing, and Bollinger Bands or MACD for confirmation. When you layer them together, you are not just guessing anymore. You are trading with confidence and precision. So if this video gave you clarity or helped you level up, do me a quick favor, hit that like button, subscribe to the channel, and drop a comment below with which indicator you rely on the most when trading gold. Also, turn on that notification bell so you never miss a breakdown like this. Until next time, stay sharp, trade smart, and I'll catch you in the next one.